spokesperson of Viral Teen Team, and one of the things I do is bring people to you who are helping businesses succeed on and off the web. Today we have with us Yolanda Leamon, who is focused on helping businesses to gain the funding and income support they need in order to take their own business, their own dreams, their own passions to the next level. Welcome, Yolanda.
Thank you.
So when it comes to gaining funding and whatnot for a small business, tell me a little bit about what it is that you do compared to everybody else.
Well, we look at your particular situation, and we try to find lenders who are looking for your situation. So lenders are looking for funding that they like. They're looking for businesses they like. They're looking for the kind of business, the kind of owner. And so we match you. And that matching can look like I'm looking for you, and I look at 200 lenders, and I find the one that is interested in something that is like you. Versus going into, like, say, walking into your local bank, and the local bank has just these few things they do, and you may not fit in that parameter. And so that's the huge advantage we give you. The other advantage is that you only have to pull your credit one time.
Oh, that's a huge advantage. Let me get to that in just a minute. Now, you were talking to me about banks versus your service, and you built that a little bit. Can you kind of build that a little bit more? Why funding through you versus banks is really advantageous for people looking for the funding?
Yeah. Well, they're all banks, actually. But I'm talking about, maybe the bank you bank at, the one you walk into. There are a lot of other banks that don't have a store, quote unquote, in your town. And they're looking for people to fund. Obviously, they make money when they fund because they're going to charge you interest and fees and blah, blah, blah. And so they're looking for specific situations. We partner with many of these kind of lenders, and they are looking for particular situations. So let's say we have a truck driver who wants to buy a truck, versus we have a person who wants to invest in property. Well, those are two different kinds of loans, and you don't go to one bank for, we have to find the bank that's looking for the truck, and a bank that's looking for, a property. And so we have a big, because we're part of quite a few brokers, we have a big network of lenders. And I get, for example, emails every day that say, we just funded blah, 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 and we are looking for such and such. And we have a really cool database that we look for specific situations. So you say, okay, this is my situation, and I plug you into my system, and I may come up with 2 or 4 or 5 different lenders who are looking for situations like you have stated. And or not. We might say, we don't have anything for you, and that saves you a lot of time. And before you go through all the trouble of filling out a ton of paperwork and then saying we don't have anything for you, which is usually the situation when you go to a local bank. They'll say, okay, before we talk to you, we want you to fill out, these 3 inches of paperwork. You fill all that out, and they say, oh, by the way, we don't do anything like that. Well, they could have told you if you'd have just said it. And that's what we do. We are more focused. We pair you with the lenders who are specifically looking for that kind of loan to do.
So it sounds like you expedite the process.
We do, yeah. And then we talk to you about what they're offering, and then if you're interested, then we go the next step, and we say to this lender, I have someone who's interested, and they'll send us a letter of interest. usually within 24 hours after we answer a few questions. So basically, when you're with us, you tell us your story, and then we take that story and we package it for each lender that is of your particular type. And instead of you having to repackage it for each one. And then we can get you, several options, or maybe not. Sometimes there's only one option for your kind of thing, or the other options really aren't, very, very, there's one that stands out sometimes. Or maybe there's competitors that have kind of the same situation, and we'll ask them to give us an offer. And when they do that, they'll send us a letter of interest on their side. And then we start the process of actually, putting together the loan package. So it's a kind of a tiered process. First we say, hey, we have someone interested. And then they say, okay, if you're interested, this is what we can offer. And then we say, okay, let me give you what you asked for. And so sometimes if a loan is large, it can take a while. If it's small, or there are different kinds of loans. Some are very fast, and some take a little longer. Commercial loans are interesting. They're quite different from like getting a loan for your house, for example. Quite different than that. It's a completely different process with some of the same components, obviously, but not near the same. A commercial loan is really looking at how you're going to pay this back, not by the job you have, but the business that you're funding, so that they're funding. So if they are funding, say, a business that is a brick and mortar, say like a grocery store. You're going to start a grocery store. They want to know if you have experience in running a grocery store. They want to know what your margins are. They want the grocery store to pay for that loan.
Got it. Now, you were mentioning earlier that you only have to pull the credit once.
Right.
In a typical process of getting loans, does a bank need to pull credit more than once? How do you measure that, and why is that an advantage?
Okay. Well, here's the thing. Obviously, loans are based on credit, yours credit and the business credit both. Since you're managing the business, they want to know that you're responsible. It used to be that only the business was checked, but now it's you and the business. So if you have poor credit, then your chances of getting a loan are decreased. But here's the thing. We ask you to pull your own credit first. Your own credit. So you could pull your own credit. Now I have a credit report that I can use. And as the broker, I can take that credit report which you pulled, and I can show it to multiple lenders before they pull it. Now they will always pull their own, if at some point, but not until we say we want you, and not until we're quite sure that that loan is going to move forward. And so let's say we take you to lender A, and lender A says, no, we're not interested. Well, they haven't pulled your credit, which is great. And then we go to lender B, and we look at them, and we say, nah, this is not what we want. They haven't pulled your credit either. And then we go to lender C, that is the one we want. And under ordinary circumstances, all of those would have pulled your credit, thus making C impossible to get, because you've had too many lenders checking. And so this solves that problem. We could theoretically go to 10 lenders, have none of them pull your credit, and get 3 offers. And then you choose the one you want, and then they pull your credit. Thus, you have avoided 10 pulled credits.
Wow.
Yeah, it's huge, and that's one of the biggest advantages of going to a broker like us versus you going to Bank A and filling out all your paperwork, and Bank A looks at your stuff and says, I'm sorry, we're not lending to that kind of project today. And then you go to Bank B and you fill out all their paperwork. Mind you, You've only filled out one set for us. That one set goes for all of them. But when you yourself go to Bank A, Bank B, Bank C, you are going to have to fill out that paperwork for every single bank every time, and they'll pull your credit every time.
Talk about time intensive.
Yeah, it's really a huge help.
Wow. So I'm hearing not only do you make the process more practical, but you also reduce the amount of time that you involved for the person seeking the loan so they can actually establish what they're looking for and be able to move on with the success of getting the funding they need for the project at hand.
Exactly. It's a huge advantage.
Excellent.
Yeah. And the cost is really very, very minimal when you look at the whole picture.
You mean your process costs?
Right. No matter where you go, you are going to have broker fees. If you go to Bank A, the guy who's sitting at the desk, he makes his money by charging you a fee. No matter where you go, you're going to have that. And so you go to us, and we have the same thing, a fee, but it's, you have all those other advantages we talked about, thus making it easier. Plus, it's really easier. You're going to. We have many kinds of projects that we can fund. Many huge projects, $10, $20 million projects, $100 million projects, or $25,000 projects. And depending on what kind of project you have, you go through us, and we can find the lender that is looking to fund that particular project, whereas it would be difficult for you to find that lender, probably.
Interesting. So what I'm also hearing, along with all the other advantages we covered just a minute ago, is you also save money for the people in the process.
Right. Definitely, because if you go to Bank A, they're going to say, okay, for us to look at you, you're going to have to pay us $1,000, whatever their fee is. And then they say, and that's non-refundable, and they say, okay, we looked at your loan, and we've decided we don't want to do it. You just lost that $1,000.
You just lost $1,000.
That's right.
Wow.
And then you go to Bank B, and you do the same thing. So you have your credit being dinged, and you have your money being spent, and you don't have a loan yet.
Wow. Interesting. So, you talked about, you said you have different types of loans and whatnot. I know that there are different, can you put a little bit more meat to the type of loans that are able to be offered? Because I know different loans have different names and whatnot. But, delve a little bit more into that.
There are probably as many projects as there are people. But okay. there are different kinds of loans as far as if it's for financing a startup of a business. That would be one kind of loan. So you have a business that you want to start. You need funding to start it, and you don't have all of the funding you need. And if it's a legitimate business and it's going to make money, then a startup has a higher risk, obviously, because it's not operating. We can't see a history of money coming in, and so that's going to be a more expensive loan. You have a brick and mortar business, which has a building and an existing, you own the building, you have a business in it that's operating, you want to expand, you want to buy another building. That's another kind. That is basically an expansion type of business. You have operating money that is needed for operating, and of course the question is, why do you need it for operating? Are you trying to do a different kind of twist to your business? Therefore, you need more advertising. You know, what is the real deal? Why do you need money that you don't have? And why is your business not providing you with the money that you need? And obviously there are good answers to those questions. You know, sometimes it always takes money to make money, always. Everybody knows that, and banks know that too. So in exchange for their money, they're going to want some of your money once you get started in your, you know, whatever your business needs are. You take a hotel, for example. A hotel can't have a business unless it has a building. So say you have a hotel and you want to have the same kind of hotel in a different city. You're now expanding your business. You need to buy a new building, and so you're going to maybe buy an existing hotel. So that has a clientele, and that's going to be different than building a new one. And so there's a lot of different things that can be seen where the needs are. What does this look like? And everybody is kind of unique, and so that's why it's good to talk to a real person, and we build your case, so to speak. We're like your loan lawyers. You know, we're going to look at your situation and build it the best way possible for you. Of course, we want you to be successful. We want to protect our relationships with the lenders. We want to make sure that we put you together with a lender that you're happy with, and that the lender is happy with you. We want, you know, obviously the lender will do their own due diligence. We do ours, but then they do theirs. They're not going to lend money unless they're quite sure that you are going to be able to, this business that you're expanding or building or whatever, is going to be able to pay for it. And, you know, they're not looking to give money. They're looking to loan money so that they can make more money. So they make their money by loaning you money and you paying them more than they borrowed. And so that's the basic idea.
Gotcha. Now let's look at the other side of the coin. Is there a particular type of person, like are there credentials that they need to come to the table with in order to be of best engagement with the processes that you bring to the table?
Yes, the best thing is experience. If you say, for example, we do loans, right? And if I go and say, I want to buy a fishing boat to go fishing in Alaska, the question is, have you ever done this before? And if I say, no, do you know anything about it? No. Who do you have on your team that knows anything about it? Nobody. The chances of me getting a loan for a fishing boat in Alaska are zero.
Mm-hmm. Sure.
I need to be able to know how to run this business, because if I bought a fishing boat in Alaska, the chances of it making money are pretty much zero.
Yeah, right. So what about like their credit score or other parameters like that?
Very important. Credit score is seen as a measure of responsibility. So if your credit score is bad, then you're seen as someone who really can't control things. And obviously, everybody knows that there are times when things get out of control, out of your hands. And that's understandable. The dot-com crash of 2007 has caused a lot of people to have poor credit. That is taken into consideration. Why is your credit poor? That is taken into consideration. But it does not necessarily help you in the big picture. I mean, it does help you a little bit because lenders always ask, why this, why that? Okay, then they're reasonable. But good credit is super important. And if you don't have good credit, a good idea is to go fix it. Build your credit back up. Make your credit be something that can be easily looked at. They're looking at credit that's higher than 680. 680, that's money close to 700. Anything in the 700s is gold and can get you quite a few, it opens doors for you that poor credit does not. There are a lot of closed doors for poor credit, and sometimes you just have to take a year, and it really takes a good year to build credit back up if it's been destroyed by some kind of family disaster, some kind of, your business closed. I have currently a situation. I have a cab company. They were the only cab company in their city, and suddenly 2 cab companies came in and took 2/3 of their business. They're now 1/3 of what they used to be. And that kind of thing can happen to people. And so we look at all the circumstances surrounding the situation, which is quite different than doing residential loans. Residential loans are a lot more cut and dried. You have to fit in the box a little more. Whereas commercial loans are it's very much about building your case, telling your story. Why should this lender lend you money, and why are you going to be able to pay them back? We help you build that story.
So it sounds like, from what I just heard, you're looking for people that have at least a credit score of 680, who have a story that they really can develop, that really makes sense. And an important point that I don't think we've covered, at least not specifically, I want to make sure we do that, is commercial versus residential. You're more focused on those commercial type arrangements, am I correct?
Completely. We do no residential funding. So if you're looking for a loan for a house, that's a whole nother ball of wax, and we don't deal with that at all. Mm-hmm. Only commercial loans. Commercial meaning for business.
Yeah, and then as far as the credit score, was I right on the 680 or above?
Correct.
Okay. Now, is there anything else that we haven't touched on that would be pertinent to somebody to consider using your services versus another person's?
Well, it depends. If you're talking about, we have a large network of lenders. That's a real plus, because we're not just lending for, Bank of America. We have many lenders that we go to for our specific stories. So you tell us your story, and then we look for the lender that fits your story. And it may not be one that you've heard of. There are many lenders out there that have their only connection to the borrowers are brokers like us. They go to us, and they look to us to find them the deal they're looking for. Brick and mortar, which is, all of these lenders have brick and mortar, but they may not. You can't walk in and say, "Hi, I want a loan with you." They'll say, "Go to your broker," because they don't want to build out the story. They want us to build out the story. They want us to come to them with it all built out, and they just want us to give them a package. They don't have anybody like us. So basically, we are their salespeople, and we bring them a package that's already complete, and we are the connection to them for you.
So it sounds like, in a sense, from what I just heard, you're like the middleman, and instead of going to another entity, opening the door for people to come directly to you, actually removing that aspect and allowing people to dial in more specifically on getting the job done for securing their loan. Exactly.
And we have the advantage of having multiple lenders, so it's not inconceivable to have like 4 or 5 for each potential deal. So if you come and say, I have this business X and I need this much money for it and this is why, I could maybe have 3 or 4 lenders who are doing that kind of loan. And then we look at the parameters. And we might offer them the opportunity to lend to you, all of them, and see which one, gives us the best deal. And everybody has a little different, twist to the kind of loans. Some of them are short-term. They'll only lend for 5 years. Some of them are long-term. They'll lend for longer, depending on what you want and what you need. Some of them are variable rates. That still exists in the lending world. Some of them are fixed. Some of them, just depends on what you're looking for, higher risk, lower risk. If you are a higher risk person, then that cuts out a whole level of lenders who do not want to do high risk. And that there are some who do high risk. High risk basically means you're going to spend more money on interest and more money on their, most of the time you have to do some due diligence. You might have to pay something for an appraisal if this involves some real estate. And commercial appraisals are pricey. They're not just $200 and $300. So you have to really make sure that you have that. But sometimes you've already done an appraisal, and that will be accepted. Sometimes the lender will want to do their own side, but that's their own business. If they want to go and look at your projects themselves, which they will most certainly do. Especially if it's a large amount of money, then they will do some of their own stuff. But due diligence on the part of the lender is enormous. They have underwriters who we communicate with, but you never see because they don't want to be emotionally tied to you. And they just look at the bare, raw facts and say, we will lend to this and we will not lend to that. Or we will lend to this if situation A, B, and C exists. And if you can meet those situations, then they'll lend to you. So often we'll get a letter of interest saying, we are interested in this project if such and such factors are in existence, or if you can produce such and such. And sometimes they look at ratios. Well, they always look at ratios, but sometimes they'll say, if your ratio is such and such, then we're interested. If it's not, then, come back another day. So a lot of, sometimes they'll ask for more information before they make their offer. And just because they make an offer doesn't mean they'll go through with it. It means they're interested in pursuing to the next step. They're interested in receiving your complete loan package, not just, the few facts that we can put on one sheet. Yeah, it's a very interesting process, quite different than residential, and we specialize in helping you put together the package that makes you look the best, and that is what the lender is looking for, so that you're more likely to be accepted.
So we pretty much have talked about everything, and you've been very thorough, and I really appreciate that. One thing that we have not spoken about yet is how do people get in touch with you?
Yes, well, you can call our office, 559-661-1852. Or
let's stop there. Let's stop there for a minute. Go ahead and go over that again, but let's slow that down just a little bit.
Sure. 559-661-1852. 1852, and we are physically located.
And when people call, sorry for interrupting again, but when people call your office, what is the name that they will be receiving?
They will be calling Leamon Business Services. Leamon Business Services. And that is our office. I do have a direct line, which once we get started talking, then I'll give that to you. Email also is another way of contacting, and that is Yolanda@LeamonBusinessServices.com. And we are very techy. We do texting and emailing and a lot of those kind of things. So it doesn't really matter where you are physically. We are physically located in the Central Valley of California, but we do loans all over the country. And so it doesn't really matter. We live in an age where technology connects us, and we're next door when it comes to technology.
True. Now, you were mentioning it doesn't matter where you are, and then you said within the country. Is your loan package global, or is it focused on the U.S.?
It's focused on the U.S., although there are some special circumstances that perhaps could be called global. That would be taken on a case-by-case basis.
Okay. But your main target audience would primarily be within the U.S.?
Correct.
Okay. Now, just so we can make sure people have that email address, can you go ahead and spell out Yolanda and then also the word Leamon, and go over that email address one more time for me?
Sure. Yolanda, Yolanda, at Leamon, Leamon, businessservices.com. And yes, there are 3 S's in a row there, business services.
There we go. I hear you. All right. So I thank you for the time that you've had, provided for doing this call. And thank you, for being here. I am Guy Severson of Viral Team. I help businesses, just like what we've done today, get the word out about what they are doing. And I do that at a no-cost basis because I really want to engage and help other people get their word out so that we can bring up the support that U.S. businesses across the world need in order to succeed. Be with me next time when I bring yet another video presentation for business purposes. Thank you for being here today. Take care.
Bye.